Welcome to Freedom Money, where we explore Bitcoin financial freedom and building in the Bitcoin space. Before we get started, just to remind everyone, this podcast is for educational and informational purposes only. Today on the podcast, we have Rich Rosdal. Welcome to the podcast.
Thank you so much, Kevin.
I'm really excited to get into it because I know it's a bit of a market focus, so I'm excited. But I want to start really with your background and specifically your Bitcoin journey.
Well, this is a little bit of history because it relates to my Bitcoin journey. In the early 90s, I started a company called Clarity Technologies. It was an IT training company. I had three partners. We each invested a total of $5K. And so with $20K, we built it up. We had two divisions. One of them was a systems integrator type business, and the other was the IT training company. So about 3 years in, we sold off the systems integrator for $1 because it was unprofitable. And we did it to find a home for our staff. And that worked out. A couple years later, we sold the company for $4 million, just the training side. And we sold it to a multi-region education company. There were 4 regions: Chicago, my area, which was San Francisco, San Jose, and Walnut Creek, California, and then Dallas and Houston. And we sold it 2 years later for $25 million. The company we sold it to didn't really understand our side of training. They were the largest training provider in the world at that time, but they put us out of business in 2 years. So the moral of this story is that the core lesson is that capital without structural understanding is a liability, not an advantage. So I came to Bitcoin as an inflation hedge and discovered that price was the output, not the driver. So I developed a framework in a little over 2 years. It was like 5,000 hours plus, working with ChatGPT, back and forth, querying, prompting, understanding, learning, and ChatGPT was learning as well. And I published a book called Reading Bitcoin in March of this year. And then from there on, just kept refining the framework. And we can discuss that a little bit later if you'd like.
I really enjoyed that story. My first job out of university, I worked for a big American bank, and I was at this job for a year. And in that time, there was a great opportunity for me to go to New York to really learn a process and bring that process back to Toronto. And so I was in New York for 3 months, apartment in Times Square, and we moved this process back to Toronto. And then I left, I got another job with a different bank. And within a year, they had moved it back to New York. They had just, and there were like multiple people, huge amounts of money. And that was kind of my first experience with exactly what you're talking about.
Yeah, it's tough when you're no longer in control of your own company.
Yeah, but again, I mean, capital is a tool when used effectively. I guess I have questions, from selling the company, does it create an investment problem? And then you're looking to learn about investments, or, how does it connect into Bitcoin?
It was just a lesson. I needed to understand what was happening beneath the surface being price. And most people who make predictions about Bitcoin and, just talk about where it's going are working only off price. And, we've seen how the pundits have done on predictions. It was supposed to be 250,000 at the end of 2025. Well, it went in the other direction. And so I needed to understand the core fundamental pillars underneath price, which are supply, liquidity, and ownership. And in understanding those, I have a much better idea of where it's going. For instance, when price was dropping, I wasn't as panicky as I would have been. I understood that, I understood exactly what the market state was. And when I say exactly, back then I only had 6 inputs. Now I've got over 50. So I understand better now. But people are calling Bitcoin right now at 20K or 40K. It's not in the data. The data shows supply is reducing. Even as price goes down, it can reduce.
So I think we dig into them a bit and quickly. Supply.
Yeah.
So to me, the thing that makes this really interesting is it's a fixed supply, and so we have the ability to kind of wrap our arms around it and make some assumptions and know some absolute truths that we don't necessarily know with a company that's buying back stock or issuing shares, or the money supply that's ever expanding. And they put out statistics, but I don't think they really have a really good idea of what these things are. They apply to money and these things. So when I think about supply, and so we talked a bit about before, I guess I want to start with the ETF flow, because that's been, I think, a big driver over the last couple of years, what we'll call the institutionalization of Bitcoin.
Yes.
And I think MicroStrategy is into that.
So treasuries and ETFs.
Yeah. And so there's public information available about that.
Yes.
So we know when they're buying, roughly.
Yeah.
ETF flow is daily. And, I'm really curious to dig into the data, because some of what you were saying before was about some of the other data being daily, and I never really thought about it that way. And so I'm excited to learn, what do we know from the ETF flows? We
track the ETF flows. They come and go. And a lot of it is because, ETFs would be like a whale, but it's a whale that represents millions of entities. All the investors in that fund are part of the ETF. So as the flow goes, so goes the ETF. And but overall, what we're seeing is there's a and a lot of it has to do with the treasury companies, especially strategy. But the whales are accumulating heavily. And I don't think it's just treasury companies. I think there are certain banks that are like foreshadowing the Clarity Act because they want to get good pricing now. So the bottom line of it is that ownership is getting stronger. All this time, we've seen retail and even some of the original diamond hands selling, hoping to get a $20,000 or $40,000 price later and get back in. But if we never get back there, they're going to have to chase. And the old diamond hands are going to become like the new FOMO guys.
When you say the whales, you're really talking about strategy in the ETFs as the whales at this point?
And just the large individuals, the family offices, you name it. I mean, just the larger holders. But certainly, she would be the whale of all whales, but many degrees of whales. And sovereigns fit in.
Isn't Coinbase the ultimate whale?
Yeah, maybe. Although I think that the next 2, maybe 3 years, you and I discussed this a little bit, we're going to see the sovereign states starting to get in on the action. And I think they've been getting on the action quietly. A sovereign is not going to announce they have a Bitcoin position until they've loaded up.
El Salvador is consistently buying.
Yes, El Salvador. Let's say El Salvador is public about it. But El Salvador is a totally different case than any other sovereign state because Bitcoin is pretty much the currency, right? You're down there more than I am.
Yeah, I mean, what I find so interesting is it's really different. In Costa Rica, I couldn't pay for anything in Bitcoin. It's like Bitcoin doesn't exist. And I was in Bitcoin jungle not too long ago, and it just doesn't feel like it's a currency here. I would imagine most of most of North America would probably still be in that category, I'm assuming. Although,
Right.
But in El Salvador, it's definitely an option to pay with Bitcoin. I would say pretty much anywhere. And there's much more interest in the community. And
yes,
I find the communities pretty interesting because there's a lot of rabbit holes and different topics, how Bitcoin is related to health, how Bitcoin is related to the money, politics, really everything. And I think everyone kind of gets this lens. It's like a mirror reflecting back at them, for their life. And that's why, some of the things about kind of your specific Bitcoin journey, I'm trying to connect the lens with what you're looking at this.
Well, my lens isn't currency. Mine is collateral. Why spend the best asset when you can spend fiat is my feeling. That's how I feel about it.
But I'm thinking more in terms of the personal lens. You had an education company, right? And
Yeah.
now you're coming at this as an educator.
Right.
And so, I'm curious if that's how you see what you're building now, or if, and you talked about some of the changes and more focused decisions you're making with the content going forward. So I'm curious, how you see what you're building.
Well, is it time for me to explain the framework?
Yeah, let's dig into it.
So, market state has 5 different states. Compression, I think of as the first, although, they're just compression flows to accumulation. Accumulation moves into expansion. Then we get to a point where there's distribution, and that's price can still be going up, but whales are little by little getting out. And then we get to markdown. And that's what people think of as crypto winter. And after we get to a certain point, we go back to compression. So, one of the key things in the framework is that there are 2 transitions that are most important. There's going from compression to accumulation. That's a great time to buy. That's actually where we are now. I think right now is the best time to buy. But
I think every time is the best time to buy.
Well, if you're a maximalist, that's true. However, I do think that there's a danger in buying when we're in distribution, especially if you have an LTV that you're watching. Not as I like the way you do with Cadena, but in the Leaden, all those guys, you can get dissolved when you go liquidated when you go too low on your LTV. So, getting a loan in distribution on those platforms can be dangerous.
Well, it's kind of amazing. I mean, I was looking at this recently, and it's a highly volatile asset, and it makes you highly likely to be liquidated or have a margin call. And so really, it's really not a great feature for the borrowers. And so, but I think the piece of it that I think about sometimes is, I mean, you're then in the position where it's forced selling, like it's liquidation. It's causing additional selling. So it's not good for the market either.
It's a cascading drop.
Yeah. And it's kind of cascading at the worst time, right?
Yeah. Right.
And so, I mean, when do we move from crypto winter to, a basing phase?
Well,
accumulation phase, because it seems to be dragging on this winter.
We're definitely in compression, but I think we've had an accumulation current for 2 straight years, underlying whatever state we've been in. Because if you look at one of the on-chain information providers, you'll see that supply has been dropping for 2 years straight on exchanges.
So let's talk about this. I know we talked about this before, and
Right.
sometimes I'll see this on Twitter and people, so why do exchanges need to have balances to begin with? These are client balances?
I'm sorry, could you repeat the last part?
Are these client balances on exchanges?
Well, it's hard to tell. I mean, there are client balances on exchanges. We know that. And it's their own limit, as we discussed. So a whale might have 10, 20 Bitcoin on an exchange. Somebody who has 1 Bitcoin might have 5,000 on an exchange. But, certainly most of the held Bitcoin is in wallets, as we know, but there's quite a bit on exchanges. So the supply we see on exchanges right now, we're at about 2.7 million coins on exchanges, on all the exchanges combined, not just Coinbase or Kraken or whatever. But that has been dropping. Now, a percentage of that is sellable supply. So, when we see it go up, somebody's transferring their Bitcoin to an exchange either to sell or to put into collateral or for whatever other purpose. And when it leaves, it's typically going to a wallet. And so, I can't tell you exactly what the sellable supply is, but the best way to track it is to look at what's happening overall.
Overall being the price?
Overall supply on the exchanges.
So I was pushing back on this a bit before, because to me, I mean, if I'm using, Bitcoin from cold storage to an exchange, I can do that, pretty quickly and easily.
Yeah.
And so to me, it's kind of interchangeable. And, we talked about before, I would just set my credit limit. I'm not comfortable losing more than, $5,000 or $10,000 on an exchange. So it's usually like straight through, then maybe money going into the bank account and coming the other way from time to time.
Right. Yeah, I agree with that.
So, but so in the aggregate, when I think of the exchanges, there's a bunch of people who just leave their coins on the exchange. They just leave it.
Yeah. So a good portion of what's on exchanges could be in a wallet if people were being very tidy. If they were keeping their house very clean, everything would be in cold storage. But we like to have Bitcoin available for emergencies or whatever. Because not every event is a lending event. You can't always spend fiat. Well, you always do spend fiat typically, unless you're in El Salvador or wherever they accept.
Again, but I think this is interesting to me, because when I think about, I'm maybe need fewer than 50 variables to keep track of, and so strategy and the ETFs are buying, and I would say these days, or it seems like we can talk about what's going on with strategy later. But I'm not sure the exchange data gives me that information.
It doesn't give you all the information, but it's not just exchange reserves. Like I said, I have over 50 inputs right now. And frankly, I don't have them all on the top of my head, but they're in my dashboards that I supply to my 4 different LLMs, which each give me a separate report. And then those reports are, and here's my least favorite word, synthesized into one report. So we take the combined information from those models and put them together into one state report. And because of that, we get a weighted direction. Right now, we're looking at a 45% upside and about a 40% downside and about a 15% roughly downside. I'm sorry, I think I messed that up. 45% compression today, which is on my website. 40% upside, 45% upside, 40% compression, and then 15% downside. So if I said it, then I said it right. If I didn't say it that way, I said it wrong. And
So, I mean, the way I read that is kind of slightly bullish.
Slightly bullish, but still we're in compression. Right now we're in accumulation, we're transitioning. Even though accumulation has been in an undercurrent. So when you talk about crypto winter, now I'm going to get into something a little controversial here. So
Good.
we get into a discussion about this. I don't think we're in a 4-year cycle. I think we're in a halving cycle, and I think there's a ghost of the 4-year cycle. So in other words, the halving cycle is the amount of Bitcoin that's available and on a given day basis every day by the miners. The 4-year cycle is how we interpret what's happened in the past. And because of that, I think that a lot of whales and retail thought they were going to outsmart Bitcoin, even though we were in a steady climb. And when October 10th came, everybody, not everybody, but a lot of large holders got rid of their Bitcoin anticipating winter. And because of that, we went down 50%.
It's like when the weatherman predicts the weather and it turns out to be true, right?
Exactly, which is 1 out of 10 times.
Yeah. No, but it does become self-fulfilling. It's there's a word in physics for it. It's like, it's interacting with each other, entanglement.
Yeah. So according to the 4-year cycle, we're not going to go into expansion until October at the earliest. I think it's possible we go earlier. It depends upon when either liquidity or announced sovereign states. Those are the two scenarios where we jump into expansion. If we started to get liquidity, then, or free flowing liquidity, I should say, the other two pillars are very strong: supply and ownership.
So I'm more a believer in,
yes.
I think the credit cycle, both the halving cycle,
okay,
or really a 4-year cycle, because
yes.
I look at the events. It's Mt. Gox, and to me, the issues with some of these predictions, right, and some of these, it's all very useful information. But what happens sometimes is, trading is like, everything's good, and then your drunk uncle shows up at Thanksgiving and Mount disappears, and then you have FTX, and then it's these things that kind of come out of nowhere that have real risk. And I think we talked about the liquidity with some of the how the market operates in some of the centralized systems, and to me again, the market activity, I would say, when I look at real corrections in Bitcoin and the crypto winters, to me, they're credit or, a failure of the system more than a 4-year cycle. And so, what it feels like is since October, there's been some steady selling of Bitcoin. And to me, when you see the supply and you can see the numbers of Bitcoin that are being accumulated by strategy over this time, it's significant. And so trying to reconcile it has been tough. And I think there's, maybe we find out down the road something else was happening behind the scene. It's markets can get pretty interesting.
I'd be interested in maybe offline getting some more of your thoughts about the credit cycle, because I could buy into that and I'd like to feed that to my models.
Yeah. And so I guess this is the next question is, what's next for the model? Do you keep, knowing where to build and what to build and where to add on?
Well, to be quite honest, when I talk to another author, somebody who has clearly thought through what's happening under price, below price, I should say, I learn more. And when I learn more, I feed more to the models and they get smarter. So, the other thing is I only have 50 inputs now. Where I see my framework going in the future is as the company is building, I'm going to take some of the profit and buy higher levels of on-chain data. Right now I'm at a pro level. Eventually, I think I'm going to have to be at an institutional level. And when that happens, it's just going to be more intelligent.
Yeah, and this, I think, gets back to what we started with, which is the fixed. And the on-chain data is, you kind of have a finite data set, right? Like there's only so many transactions and you can see them all. So conceivably, everything is knowable.
Right. But, I have high hopes for what the institutional data says, because there are numerous reports that even I'm not feeding to my models. 50 over 50 is a lot, but in the future, I just plan to keep growing the intelligence.
So a couple pointed questions just to finish. What's next in the space?
What's next in this space? We're in compression, so it's possible we could stay here 6 months. It's also possible that, one thing that I think could alter things is really a fourth category that I've been tracking lately, which is macro news. Initially, I kind of ruled out macro news and thought the news isn't really what's driving things. But if an event like the Clarity Act passing or the Bitcoin Act passing in the United States government, we would see banks flowing in on how much Bitcoin they own. And what that would mean would be a supply, it would be a supply war. Everybody would be fighting and prices would reprice consistently. And that's where we'd see expansion to maybe a greater degree than we've ever seen it. But those are unknowns until they occur. I see the Clarity Act as having some hurdles still. I don't think it's a done deal. The Agriculture Committee doesn't even understand what they're dealing with to a certain extent. The Banking Committee has come up with something, but there's also the Democrat versus Republican issue. And, Democrats don't want to let Republicans win. And, it goes both ways. Republicans never want Democrats to win either. So it's going to take some bartering to get both acts passed.
How much does the market discount this? Like when I think of market efficiency and what we talk about in traditional finance, isn't the market just discounting this and Bitcoin's being bid up as we're getting more and more closer to the passing of the Clarity Act?
I don't follow the betting sites, but I think it's a good idea. Maybe those should be inputs as well.
Probably. And then, you've built businesses before and you're building something substantial here. What's your advice for builders?
Understand what you're building before you build. It took me 2 years to even get to initial level of understanding. Where I am now is nowhere near where I hope to be in tomorrow or 10 years or whenever. But I never, and this is true of you too, you never could have written your book unless you understood what your perspective was and the way you absorbed the information. And the same is true for me. I needed that 5,000 hours of back and forth with ChatGPT to get to a point where I understood all the variables. I started off saying, where do you see the price in 3 months? And ChatGPT would accommodate me. But eventually we got to a point where we said, forget price. Let's look at what's underneath, because that's all that's really important. Tomorrow the price could drop to 49,000.
Mhm.
But do I think it will? No, based on what I'm seeing in the data. And, I see various analysts on social media predicting things like that. So there's a lot of noise, a ton of noise, and it's very confusing for everybody.
Yeah. No, but it's helpful to have, you know, a dashboard, something you can look. Yeah, exactly. Um,
Yeah.
and the message that I would have for anyone in this is it's not, it's a game of probabilities. If anybody really, had the magic wand, and I think as this market develops, there's so much, potential, because I don't think, it's making me question everything I know about marketing. And, I think there's ability to outperform with stocks. I think having information is going to be helpful to potentially, understanding your position and how this can tie into other things.
Right.
You mentioned the macro, and sorry I was trying to end it and keep it to 30 minutes, but I do want into this because in the report you talk about rates, a reasonable amount, and liquidity was something you were talking about before. Where do you see that now?
Okay. Well, we touched on this briefly. I know you follow the 10-year more than I do. I'd be interested in having an offline conversation on that. I follow the 30-year more because I see that as the liquidity governor. That is keeping liquidity down right now. Right now, we're at 4.94% yield on the 30-year. And when we get to 4.5, that's when we'll be in much better shape, when the market will be much more healthy from a liquidity perspective.
The thing that I think is tough now is finding the patsy on the other side of that trade that wants 4.95% when printing money at 6 to 8% a year, and telling people inflation's 3 to 4%, and paying taxes on the full nominal gain. Like, it just seems like it's a bad idea unless you're tied into it and you need for regulatory capital and you're a bank. Like, it is completely nonsensical now. And to me, I think the reason, like, look at where they're borrowing, and it's all short-term borrowing, and there's talk of all these. And so to me, that's where the rates are being set on the margin, is where there's that liquidity, and it's all like less than 5 years now. And rates, I just, it seems to me the only way that we're going to have bonds enough to drive yields down is when the central banks come in and buy them again. Like, that's the way rates go down. And
right,
I guess it's a question, right?
Yeah. And then there's the question of what is the Fed going to do in light of, Kevin Warsh is on record saying that he wants to shrink the. Well, that's been tried before. We don't know if it's going to work. Maybe. And that's why I guess what he announced in his FOMC meeting notes after the meeting was that he's forming a committee to follow the balance sheet and to come up with. He didn't go into a lot of specifics, but it'll be interesting to see what happens, because his premise is that when the balance sheet is trimmed, that bringing rates down will be easier. So, this certainly is not my lane. I'm not a Fed expert, but it'll be interesting to see how that pans out, because that will have a great impact on liquidity.
Yeah, I find it's just, the numbers used to make sense in terms of you could, balance the budget, and over time it would go down. But it seems like we're well past that. And so
Yeah.
it's really, be interesting how they continue to generate confidence in this paper.
It will be. It will be. And I have to tell you, like I say, I'm not an expert on the subject, and I wouldn't be. And so I think I'll wait and see before I say any more about it.
Well, I appreciate your time today, Rich. I know we kind of scratched the surface, and there's a lot more we can get into, and I'm pretty sure that.
Yeah, I look forward to it.
And
Thank you, Kevin.
Where can I send people to find you?
Okay. I have a specific link for anybody that wants to sign up for the market state reports. The individual level is $49 a month, and that will never go up. So that will be, assuming fiat doesn't, explode. But
you might want to hedge that.
Let me hedge it. The intention is don't raise prices. However, that's for the first 50 charter members. After that, it's $199 a month. So it's like a 75% discount right now. And for anybody watching this video, the site to go to is btcintelligence.ai. And then when they're on my website, on the top toolbar, there's a link for current market state. That will be password protected this week. Right now it's open. So if anybody gets this before it's password protected, they can look at it. But for anybody coming through Cadena, they'll be guaranteed the charter rate even if we surpass 50. But otherwise, the price will go up.
And we'll have, I think, links on the website through the partner section, as we do with other partners, and add links to the show notes also. So yeah, and I look to get into it more. And I think you're right. I think there's a much more interesting conversation had when we're not just talking about price.
Yeah, exactly. Yeah. Price is a roller coaster, emotionally, financially, you name it. And that's what gets, the smaller retail customers. They see, wow, Bitcoin's going through the roof. I'm going to buy in. You know this. Everybody knows this. And then the next thing you know, we're in Bitcoin winter, or what people call Bitcoin winter. But, and then they sell at the bottom. And it's unfortunate. So that's part of what I'm.
It's a story as old as time, right? It's just, if people know what they had, and then they looked back. And
exactly right.
Thank you very much, Rich. We will do it again soon. Thanks.
Thank you, Kevin. I look forward to talking to you offline also, if you're open to it.
Absolutely. Talk soon.
Thank you.